Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, January 10th. Well, ahead of today's much anticipated USDA data, prices across the ag space are currently mixed, mostly higher. The biggest feature just continues to be the strength in soybean oil, which is currently up just over a full penny, surging to its highest level now in nearly 2 months. Prices are drawing support from higher energy prices, along with reports yesterday that the Biden administration at some point today was going to provide some short-term guidance on biofuel tax credits available under 45Z before leaving Washington now in less than 2 weeks. The report, however, went on to suggest that he would ultimately defer to President-elect Trump for any final decisions. The higher bean oil prices are giving beans a lift, currently 4 to 5 higher. Meal is steady to about $1 lower. Corn and wheat they're mixed. Corn actually firming up a little bit now, 1 to 2 better, while wheat is within about a penny of unchanged. We do get export sales and the December employment report from December at 7:30 this morning, while USDA data is at 11 o'clock Central Standard Time. The trade does expect slightly lower corn and soybean production and stocks, along with slightly lower U.S. winter wheat acres. Market also expects another large week of soybean oil sales, while also bracing for a higher export forecast in today's WASDE report. Recall the USDA already raised this forecast, almost doubled it in December from 600 million pounds to 1.1 billion. At minimum, I would expect another 300 to 400 million bushel increase, which will likely have to be at least partially offset by reduced domestic consumption to keep inventories from falling to historically tight levels. So now it's up to the market to slow this demand while also increasing the production incentive via higher crush margins. About the only change that we expect from South America is slightly higher soybean production from Brazil, with the USDA choosing to wait another month to see how this hot, dry spell in Argentina plays out. It's crucial that crops in Argentina do receive some precipitation by next weekend across these drier areas in the central and eastern growing regions of the country, as declining soil moisture is starting to stress both corn and soybean crops. The Buenos Aires Grain Exchange did report yesterday afternoon corn and soybean plantings and wheat harvests are both just above 90%, or all above 90%, with slightly lower crop production or crop ratings for both corn and soybeans. Corn prices now are likely to consolidate just below the recent highs here at 460 ahead of today's data. Probably need to see U.S. stocks draw down below 1.6 to see a retest of the 475 level, and likely near 1.5 or below to generate a test of the $5 price level. China did lower their corn import forecast here overnight from 13 to 9 million metric tons. Recall the USDA back in December lowered their forecast to 14 million metric tons. Beans are back above that $10 level here in the March contract, supported by the bean oil, and also those prices build a little bit more weather premium due to the uncertainty in Argentina. Big overhead resistance here in the 10.15 to 10.20 area for that March contract. Speculative traders now have been net buyers in bean oil for the past 4 sessions, however, still likely holding a modest short position heading into today's reports. The overnight high in March futures at just below 44.40, which is a 50% retracement of the November high to the December low. Meal also fell to a three-week low before recovering, and wheat just continues to grind sideways to nowhere. Look for a slightly higher production estimate out of Australia, while slightly lower exports from Russia later in today's WASDE report. So good luck with today's reports. We'll check in after the USDA data with a full recap. Have a great day.